Hello ladies and gentlemen, this is Sugar's Crypto. On this video we're going to talk about what's affecting everyone and why remain bullish on Bitcoin. Remember, I'm not a financial advisor, always do your own research. In 2013 I started investing in Bitcoin due to many awareness in the financial sector that I learned from a great mentor. I still owe a great amount of gratitude to. I'll make a video on my journey why I got into Bitcoin with more details on another video, okay? On this one I'll be giving one important awareness, the inflation of the dollar and why remain bullish on Bitcoin. As you can see on this website by tradingeconomics.com, we can see a continuation of the inflation from 2% last October 2017 to 2.3% this October 2018. It was at 2.9% on June and July this summer. Usually summers, the rates tend to go up in every single year. As you can see, it goes up and down month to month, year by year. But what's more important is to consider that there will always be flowing dollars out of the thin air to this economy to keep it alive. The stocks reaching all-time high this year. Just to put a stock on our radar, Dow Jones Industrial reaching all-time high right here, guys. All-time high on October the 3rd, reaching $26,828.39. Now, this is all-time high, ladies and gentlemen. If you click the max, you know we're at the peak. You know, if we go even 5 years ago, we still, you know, I'm not lying, this is all data. So this is all legit. So the Fed has been working on quantitative tightening campaign started on Q4 2017. I'll be reading briefly and I'll let you know what Bitcoin and the whole trading cryptocurrency has to do with this. Now this article is made by seekingalpha.com. I'll leave this article in the description below, as well as the Dow Jones Industrial and the inflation rate also. So the Fed's quantitative tightening is bull death nil. The Fed is unprecedented quantitative tightening campaign unwind trillions of dollars of QE, quantitative easing, is just hitting terminal velocity. That's incredibly bearish for the bubble value stock market lay in a monster bull. Even 50 billion per month full stream quantitative tightening would have to run for 30 more months to even unwind half of the Fed's 3 trillion quantitative easing. Quantitative tightening is a dire threat to stocks. Stocks have never faced Fed's quantitative tightening at scale. They follow the Fed's surging balance sheet up as quantitative easing ballooned. So they all almost certainly mirrored their Fed's balance sheet contraction under quantitative tightening. The Federal Reserve unprecedented quantitative tightening campaign is finally ramping up to its full stream speed in Q4. That will destroy 50 billion per month of quantitative easing money created out of thin air. Quantitative tightening will need to maintain to its terminal pace for over 2 years to meaningfully unwind the Fed's grotesquely bloated balance sheet. This record tightening poses a dire threat to today's quantitative easing inflated over value stock market. This week, traders are focused on the Fed's 8th rate hike of this cycle, which was universally expected ever since the FOMC's previous meeting in early August. Federal funds futures have implied odds of other hike up and 91% to 100% at this latest meeting. But the Fed's ongoing hiking pales in comparison with what's doing with its balance sheet. 1 year after its birth, quantitative tightening is hitting full speed. Rightfully concerned about quantitative tightening impacts on the lofty stock market, the Fed prudently took an entire year to ramp it up in a terminal velocity. quantitative tightening started almost imperceptibly at 10 billion per month in Q4 2017, before being ratcheted up another 10 billion month in each subsequent calendar quarter. The financial increase is going into effect in this imminent Q4 2018, taking quantitative tightening to a staggering 50 billion per month pace. That's a record tightening. Quantitative tightening is incredibly bearish for today's record high bubble value stock markets, late in a record bull that was largely driven by the Fed's early extreme quantitative easing. Quantitative easing conjured literally trillions of dollars out of thin air to keep interest rates artificially low and greatly boosting stocks into multiple ways. Quantitative easing left bonds yields uncompetitive with stock dividends, justify extreme stocks overvaluation, and fuel epic stock buybacks. So, they are trying to reduce the US dollar being printed or being issued through our economy system, which creates the dollar inflation, which means things will cost more to buy, like stocks, housing, commodities, assets, goods, and services, and wages rates are staggering without keeping up with the inflation rates being issued. So they're trying to reduce the US dollar being printed, but they will always print money, guys. They will never stop. Okay. What has to do inflation with Bitcoin and cryptocurrencies? Well, to begin with, Bitcoin and cryptocurrency, they are hard assets. New blockchain technology and adoption is on the rise from institutional investors through new services, and that TD Trade and Fidelity is going to enable institutional investors this Q1 2019 or Q2 of next year. The price of these hard assets are more likely to protect your savings, hardworking money from devaluating your fiat currency year by year. These things are very important to consider when investing. Like I said, I'm not a financial advisor. Always do your own research. This is Sugar's Crypto. To support the growth of this channel, subscribe and hit the like, and don't forget to share this video. Thank you and have a wonderful life being aware. Thank you.